session and even that European session before it. In the end, though, not quite reaching those heights. You'd have to expect some of that was maybe priced in yesterday, but still a positive one on market.
A very positive day, probably surprisingly strong. We did actually finish right near the highs of the day at the close there, which was surprising given during the day we saw the Dow futures and the S&P futures come online in negative territory, yet our market shrugged that off and continued to move higher. Really driven again by the sectors that have been driving the market over the past few days, the materials, energies, industrials, consumer discretionaries, at the expense of the defensive sectors, the healthcares, the properties, the utilities. And I think possibly awaiting the reopen of the Chinese market, which you would expect to open higher after it's been on holidays for a couple of days. So really the materials sector is a big outperformer there, and they have been underpinning most of this rally we've been seeing recently. If you look at the big four mining stocks on our market, BHP, Rio, Fortescue and Newcrest Mining, they make up around 15% of the market capitalisation of the ASX 200. So they do have a significant say in the way the market moves. Though that is a far cry from a couple of years ago when BHP used to make up 15 or 16% of the ASX 200 alone before it dropped back from around $50. But it has been those most beaten down stocks of 2012 that have outperformed once again, particularly within the mid-cap and small cap space today. They were big outperformers, particularly around the mining and energy space. We saw big moves from Macmahon Holdings up 12%. Some of the other big losers of 2012 like Aquila Resources up 7%. And we saw a couple of interesting moves, new all-time highs again for Commonwealth Bank shares, and Telstra touching $4.50, which was a great move considering it doesn't seem all that long ago that people were scoffing at the fact that it was going to reach $4.
For 2013, albeit, you know, very early on in the year. But look, how much stock can we place in it considering the ongoing levels of participation? I mean, volumes remain very low.
Volumes were again very low. I think there was about 2.7 billion traded there after the close today. So very low volumes. I mean, down on historical averages. A few years ago, you're talking about average volumes on the ASX being around $6 billion. Last year through 2012, that average came down significantly, probably around 4 billion was a sort of an average day on the market last year. But a very quiet Christmas period as expected, so volumes have picked up a little bit, probably helped the market move higher today. The market does move a little bit easier on days where volumes aren't quite as heavy. So, I mean, the market will be waiting for some of the volume to come back into the market to really see if this is a substantial rally or not.
Tim, we spoke yesterday about the charts, about the technical outlook for the market, not just our own, but US markets as well, and particularly for our own moving day averages looking very positive. We were talking just shy of 5,000. Looks still the case?
That's right. Well, this rally we've seen on the Australian market has accelerated significantly over December. You actually now have to look at a sort of a longer term graph to identify where it might target as some resistance. So looking at a 2-year graph of the Australian market here, you can see this uptrend peak that's been happening for about 18 months there. We've clearly broken above that here now. And looking back here, we're now going to be targeting around 49.70, which was the highs seen on the market back in early 2011, as probably the next place to place resistance on the market. And at the moment, there's still a few hundred points there, so plenty of space on the charts at the moment for the market to continue to head higher. But you look at some of the key stocks on the market, some of the miners and the materials spaces are starting to head towards some key resistance levels. We saw BHP trading today just above $38. The 2012 high for BHP was around $38.20, so it might find some resistance there. Looking at Rio Tinto, $72 is quite a key level for Rio Tinto. It's trading above $69, so in the next few days that will be a level to watch. Fortescue as well today, trading very close to resistance around $5.10. So it actually made it to $5.10, then moved back a little bit during the session. Atlas Iron was an interesting one to look at because most of the iron ore stocks were higher. It actually traded lower today after hitting resistance of around $1.90. And there's numerous other charts on numerous other stocks on the market that the charts are starting to look quite bullish on. Linus also looking, it's found a triple bottom. So there's plenty to look at on the charts at the moment. I mean, in the commodity space, there's heaps. I mean, copper's another one, for example. If we have a look at the copper chart, you can see the trading range in copper has been narrowing significantly over 2012 and into now. So it's right at the top of that range at the moment. So we could be looking at a breakout even in some of the commodities.
About this sort of search for sustainable dividend yield and I suppose a bit of a safe haven, if you like, within equities. Telstra and CBA very much front and centre. But again, we've seen that at the beginning of this year. I mean, do you see them as ongoing opportunities or do they start to, I don't know, settle a little bit?
I think they probably will, but people might be a little bit more selective about the particular stocks they go into for yield. You look across the banking space, some of those stocks have become very expensive. Take CBA, for example, and the yields are coming down now. But then you look at someone like a NAB that hasn't performed so strongly across 2012. The levels that you're buying in at now is presenting better dividend yields. So you might see some more selective buying. But across 2012, other than the yield plays, we also saw defensives as a massive sector. And what we saw on the market today was a switch. It was defensive in yield 2013, and it seemed to have been risk in yield today. So investors switching out of the defensives into the risk today, but also still buying yield today. We saw Telstra up today, we saw Commonwealth Bank up today, and some of the other banks as well, while the defensives were lower. So I think, I mean, as everyone's talked about a lot with the possibility of further rate reductions, cash rates coming down, investors still looking for yield, of course, an ageing population with people moving into retirement from accumulation to income. They'll be looking for yield to support their portfolios as well.